welcome back to my channel. In today's video, I'll be discussing some of the most common sports stocks. I'll cover everything from the pros and cons, and I'll dive into the fundamental and technical analysis of each one. Now, although this is opinion-based, I'll definitely provide the numbers so that you can draw your own conclusions based on the data. I'm also very interested in hearing y'all's opinions on each of these stocks, so don't hesitate to leave a comment. But before we jump into it, I do want to mention that prior to investing in any of these stocks, it's important that you research the companies and consider your own personal goals. I will say the pros of investing in sports stocks are that it allows you to diversify in various sectors such as entertainment and gaming. And because some of these companies are very innovative, it can help drive the growth of the corporation, hence the growth of an investment portfolio. Now, on the other hand, some of the cons of investing in sports stocks are that there are increased economic risks that tend to affect the stock's performance based on trends. In addition to that, there are industry-specific challenges involving regulations and competition. Now, because of that, some of these stocks have inconsistent price volatility, resulting in short-term market sentiments for investors. So all in all, with the stocks I'll discuss, just make sure you research them and invest at your own discretion. So let's go ahead and get started. All right, so we'll go ahead and start it off with Nike. And you guys can see here, I have the ticker symbol at the top right, which is going to be NKE. And of course, Nike is traded on the New York Stock Exchange. So just a few things about the company, and then I'll provide the pros and cons. We'll also take a look at the fundamental analysis within Yahoo Finance. And then of course, I'll show you guys the actual technical analysis when we get to Thinkorswim. So just a few things about it. We know Nike is a global leader, of course, in athletic wear, apparel, and equipment. It has, of course, a strong brand popularity, but that does not reflect the stock's performance, and we'll talk about that in a second. The investment potential for Nike is a bit questionable just because of the inconsistent growth of the stock. We'll also mention the fact that Nike is driven by innovation because of the global expansion and strong marketing strategies. Now, we know as far as athletic wear and apparel, Nike is like a brand name for everyone. Like we all know Nike when we see it, we know it. It's a household brand, household name. Now, some of the pros of Nike are that, of course, we know the strong brand image allows for the distribution network to be global and worldwide. It also provides diverse revenue streams, including direct-to-consumer sales, so that's a positive thing as well. The continual investment in innovation and their marketing. Obviously, we know athletes like LeBron James, of course, have signed lifetime contracts with Nike. So again, that brand presence is just very, very strong. So they've done a great job with their marketing. Now, some of the cons of investing in Nike are that its vulnerability to the economic downturns, it affects a lot of the discretionary spending for the company. Also, the dependency on consumer preferences and fashion trends. So we know trends can be up and down. Obviously, you may have a quarter where Nike is performing really well. Of course, we know the holiday seasons are going to be one of the times where you do see the high performance of the stock because people are buying. But again, it's up and down. You never know with this particular stock. And then, of course, the competitive pressure from other major brands. There is stiff competition because Nike, of course, is competing with so many other athletic brands and athleisure brands as well. And we'll talk about one of those in just a second as well. But yeah, we definitely see Nike as an investment. Now, it's totally your choice on whether or not you feel it's a strong investment after you kind of look at the financials and look at the technical analysis. But we'll go ahead and dive into that. Before we do, I do want to quickly mention that Nike's market cap is around 110 billion, and they also do pay out a dividend. So their dividend yield is going to be 2.04%, and it's going to be paid out every single quarter. So that is fairly decent as far as the percentage for the yield. Not super high, but it's more than 1%, so it's a decent amount. At least you would get that dividend every quarter if you invested in the company. So let's go ahead and take a look at the financials in Yahoo Finance. All right, so diving right into it, you can see I have Nike pulled up here in Yahoo Finance. And of course, we see the ticker symbol in parentheses. Underneath that, we see the actual share price and what Nike is currently trading at, which is going to be $73.55. You also see the plus or minus as far as the percentages and the change. And then under that, you see the after hours, and you can see the percentage change as well. Now, under that, you're going to see the valuation measures, and you can see it's set for quarterly. Now, we see market cap, we see the enterprise value, trailing PE, and it's telling us that it's for current They also have it for May of this year. They have it for February, and then they go back into 2023 for November, August, so on and so forth. So I'm going to just go ahead and keep scrolling past these numbers because I feel like it's important to touch on a couple other factors as far as the fundamental analysis is concerned for Nike. All right, so taking a look at the financial highlights, we're going to look at the fiscal year ending for May 31st of this year. We're going to also see the most recent quarter, which is that MRQ, and you can see it in parentheses. Now we're going to go ahead and take a look at the profitability. We see the profit margin for Nike is at 11%. The operating margin for that TTM, which is the trailing 12 months, that's at 15.78%. And for anyone who's unaware of some of these acronyms, I believe they actually have it listed. Normally they do, so you guys can understand what the words mean if you're not aware. Let me scroll down to see if they have them listed, the abbreviation or like acronym guide. Yes, they do. On the bottom right, you guys can see it there. So it says the most recent quarter, again, you see it's as MRQ. The TTM, again, is the trailing 12 months. So just make sure you guys have that reference guide if you're unaware what those words mean. So we're going to go back up. So now we're going to take a look at the income statement. So we can see the revenue for Nike is at 51.36 billion. And then the revenue per share is going to be at 33. Now, again, we're going to take a look at what this means specifically. So when we look at the quarterly revenue, they're at a negative 1.70%. So as far as growth, they are in the negatives. We look at, of course, the net income. We can look at the diluted EPS, all these things as far as quarterly earnings and the growth. You can see the numbers there. So this is telling us that Nike is not performing as well as it should be because they are, again, in the negative. So I'm going to go scroll down so we can look at the balance sheet. Now we can see the total cash, and again, this is for the most recent quarter. Nike has $11.58 billion of total cash, but their total cash per share is going to be 7.72. Their total debt is 11.98 billion. So when we look at the total cash that they have on hand, obviously it's not as much as their debt. So their debt outweighs the cash flow that they have. That is a problem. So again, I'm not saying Nike is a terrible company not to invest in. I'm not saying that, but I am saying taking a look at the numbers, we can see the company is financially not doing as well as they have in previous years. Now, does this mean that you should just avoid ever purchasing Nike stock and never buy it? No, it just means that, you know, some companies have ups and downs. We all know revenue won't always be at the highest peak forever and ever. You're going to have, you know, economic downturns for any company. So when we look at the cash flow statement, you see the operating cash flow is at 7.43 billion. Again, that's subjective in whether or not you feel like that's, you know, something that's positive. I feel like that number is pretty low for the brand to be as big as it is. But again, that's my personal opinion. I'm just providing the numbers. So let me scroll back up so we can go ahead and take a look here on the right side. You're going to see the trading information. It's going to tell us everything we're going to take a look at within Thinkorswim. But I did want to mention very quickly before we hop into it, if anyone is unaware, 46% of the company for Nike, of course, is owned by institutional investors. So if you didn't know that, now it's something you do know. And then in addition to that, 52% is owned by public companies and individual investors. So what does this mean? Basically, I'm saying that because the ownership is like 97% with outstanding Class A shares, meaning that it's privately owned in the sense that we have the investor being obviously the founder, which was, you know, Phil Knight. They hold the majority of the trust of the shares for the Class A. Now, this allows the Knight family to have full total control for the most part, even though this is a publicly traded company. So the Class B shares of Nike, of course, we know, of course, are the ones that are publicly traded. But the most recent, as far as the directors that are elected, they're elected by Class A shares. So I'm interested in hearing y'all's opinion on this and whether or not you feel like Nike is a good stock to invest in. Personally, I'm choosing not to do it at this time just because financially it's not doing so well. But again, I'll go ahead and show you guys what the chart looks like in Thinkorswim. So let's just hop into that. Okay, so taking a look at Nike on the 5-year chart, you guys can see here the up and down momentum of the stock, and you can also see the highs and the lows. So back in 2020, we see that the price of Nike at the low was $60. And then you can also see in late 2021, there was a high of $179. And of course, you guys can see how the price has fluctuated over the past 5 years. Now, within taking a look at the financials, Now that we can compare that to what we see on the chart, it does also make sense why the stock has performed the way it has in the past 5 years. We do know everything that took place in 2020. Of course, that would make sense why the low would be there. And for a lot of the stocks, you will see the similar thing. They had experienced a low, obviously during that time period. And then, of course, they had a bounce back. So you can see that here for 2021. And then, of course, the stock has dropped since then. And it's pretty much stayed within the range of that $80 to $70 price that you can see here. So again, these are just factors to keep in mind. I'm not going to chart for anything because this is not that type of video. I just wanted to show you what it looks like on the chart. Now, some may ask, do I trade options with Nike? My answer is no. This is more so about buying whole shares of the company and then deciding to either hold them long term or to, remove them from your portfolio. So for me personally, I have not traded Nike in options trading. And it's something that anybody can choose to do so if you want. But the liquidity and the volatility is not back for me to feel confident enough to trade Nike. So that's just my opinion on it. And you guys can feel free to have your own take on it. So yeah, that's Nike. We'll go ahead and wrap it up and move on to the next. All right, so next up is DraftKings. Now we know this particular company is very popular, very well known as far as like within the sports, betting, and gaming realm. But let me just go ahead and start with giving you information and of course providing those pros and cons. Now DraftKings is traded on the NASDAQ. The ticker symbol is going to be DKNG. It operates as far as online sports entertainment and of course within the gaming industry. Now, it offers daily fantasy sports contests and, of course, sports betting, which has now recently become something that's extremely popular within, like, the sports realm. The potential for investment is that it has the growth opportunities with the expansion of online sports betting here in the U.S. However, the company does face regulatory challenges and competition because we know there's other betting platforms such as like FanDuel, and we know that can be kind of stiff competition as well for the company. And then also Prize Picks is another big one that I know a lot of people kind of, choose to use for their betting and online, sports contests and things like that they put, money up for. Now, when we look at the pros for DraftKings, we see that the growth potential is, of course, going to be the gaming industry, the sports betting, the expansion opportunities, because it has become legalized in a lot of states here in the U.S. Not all states, but in some states it is. They do have a strong brand recognition, and of course, their customer engagement is pretty high as well. Now, when we take a look at the cons for DraftKings, again, it's going back to the regulations. Those challenges can become potentially dangerous in terms of how they're going to have the laws set and how the regulations will be, just preceded as far as policies and what they, mandate for it. It does have, again, that competition is always going to be there with any company that you invest in. There's always going to be some competitors. So, of course, that betting platform is going to be always an element that we see as a level of like, okay, this company may not go this direction based upon the fact that other people are choosing other platforms. And then, of course, the vulnerability to sports seasons and the events, because that affects, the activity in which people participate. So if you have a stronger season for like maybe football or basketball, you may see some downturn when it's the off season. So those are the pros and cons of investing in DraftKings. Now, the market cap is approximately $18 billion. And DraftKings does not pay a dividend. So if you're searching for dividends within this sports stock, it's not going to give it to you. So that's just something to keep in mind. Now let's go ahead and take a look at the financials, of course, within Yahoo Finance. So now taking a look at the financial highlights for DraftKings, we see that under the fiscal year, they have it ending for December 31st of last year. The most recent quarter, that MRQ, is going to be for March of this year. Now, in terms of profitability, we see the profit margin is at a negative 13.45%. The operating margin is also in the negatives at negative 10.58%. And that translates over to the return on assets, which is at a negative 8.68%. And then the return on equity is also in the high negatives at negative 59.24. So you guys can see the recurring pattern within this. Everything affects everything else. So you look at profitability, when you look at the return on assets, and then you look at revenue, it'll always usually make sense why the numbers look the way they do. So I'm going to go ahead and scroll down a bit and we'll take a look at their balance sheet. Their total cash for that MRQ is $1.19 billion. Total cash per share is going to be 2.5. Their debt is going to be 1.34 billion. So when we look at cash versus debt, they obviously are in debt. So this company is not performing well as mentioned. You guys can see that. And then you look at the cash flow. You can also look at the other side, which is going to be on the right. We're going to go ahead and take a look at the trading information. Again, we'll go ahead and touch on this within Thinkorswim. So let's go ahead and hop into that now. Okay, so now we're taking a look at DraftKings, and we can see that the high of $74.38 was in the year 2021, and then we see the low at $9.77 was in the year 2022. Now, since then, the stock has rose back up to the current share price of $36.73. However, you guys can see the inconsistencies. Now, of course, any company is going to have highs and lows. We know that. But for me personally, investing in this stock is not a decision I'm choosing to make, just because I don't have the confidence in the stock's performance and in the company's performance overall as well. Again, do your own research and kind of make sure you understand the ins and outs if you're choosing to invest. This just isn't a stock I personally would select as adding to my portfolio. So yeah, this is going to be the overall scope of DraftKings within the past 5 years. All right, y'all. Next up on the list is GameStop. So, of course, GameStop is traded on the New York Stock Exchange with the ticker symbol GME. Now, I'm laughing a little bit because y'all already know what I have to mention in terms of GameStop as far as like the controversy that's been surrounded by the company. But let me give you a breakdown if anyone is unaware. So GameStop operates retail stores that sell video games and, of course, consumer electronics to those who are gamers. It's gained significant attention due to the short squeeze in early 2021. So if anyone is unaware of what a short squeeze is, I'm gonna just summarize it real quick by saying it's a finesse. Like, if you're unaware and you're like, I don't know what a short squeeze is, it was a finesse. Like, consumers got together, they made a game plan to do something with the stock to have it move in a certain direction. They all got on the same accord and they finessed. Like, people made thousands of dollars. Like, some people are still like eating off that money that they made from GameStop back in 2021. So this was a whole thing. Like, it made the news. If you haven't researched it, I say take some time to kind of just see the details of it. But yeah, they had a whole thing about GameStop in early 2021. It was kind of crazy. They disrupted the market with that. I will say that for the short period of time that they did, they were successful. People made money. It worked. But hey, that's a whole nother story. But as far as the investment potential, because GameStop is highly volatile, and then of course the speculative nature, it has rapid price fluctuations. So this entails like the long-term outlook is going to be dependent on the ability to transition towards digital sales, and it has to be lucrative in the long run. So it's, again, capitalizing on what's happening now, because we know a lot of times gamers, they don't have to go into a retail store to purchase any games. It used to be the case, but in the coming years, you can just go ahead and download games online. So for example, Roblox, right? My niece and nephew, they love that game. So they don't have to go into a physical location to be able to play those games. So that's another reason why, of course, GameStop has to compete in order to adapt to the changing consumer needs and their preferences. Now, some of the pros are going to be the potential for high returns due to the volatility and the speculative trading of the company. So that's a way to capitalize. Now, also the transitional efforts towards e-commerce and digital sales, if they make that transition smoothly and they have that seamless kind of way of, phasing that in, that's a bonus for them. Also, a strong community and brand recognition among gamers. Again, you can't beat that when it comes to GameStop. We all know that's, main priority for those who, entail playing video games frequently. Now, some of the cons are going to be the high volatility stock prone to rapid price fluctuations. That may not be a con for some because, again, like, for example, stocks like Tesla that are very volatile, you stand to make a lot of money if you know what you're doing as far as trading. But if you're looking for buy and holding shares for long term, that can be a con because, again, you don't want to risk losing a whole ton of money on an investment that's not super sound. Also, the business model changes in the shift from physical to digital gaming. That could also be a potential con, just depending on how they take care of their financials. And then lastly, the regulatory risk and competition within the gaming industry. Again, there's so many different options for gamers. They don't necessarily have to settle for GameStop. So again, stiff competition. Now, the market cap is going to be around $9 billion for GameStop. And again, they also do not pay a dividend. So if you're seeking dividends from this company, you won't get it there. So let's go ahead and hop into Yahoo Finance and we'll discuss the financials. Okay, so taking a look at the financial highlights for GameStop, we see the fiscal year ends for February of this year. The MRQ is going to be for May of this year, and then the profit margin is at a 0.51%, with the operating margin in the negatives at 5.74%. Now, when we look at the return on assets, it's also in the negatives. The return on equity is pretty low, it's under 2%. So I'm going to scroll down so we can look at the income statement. Again, the revenue is at $4.92 billion. We also see under balance sheet, the total cash is going to be $1.08 billion, and their debt is $588.7 million. So again, these numbers, not the best as far as performance, and you guys will see that obviously as we hop into Thinkorswim, but I just want to provide the numbers. And then let me show you the cash flow. We can see the operating cash flow is in the negatives. And again, that's reflecting on what we see for how the company has performed. So let's just go ahead and hop into Thinkorswim to look at the 5-year. Okay, so moving on to GameStop on the 5-year, you guys can see here back in 2020, the low for this stock was less than $1. So this was a penny stock back in 2020 for those of you who remember. Now you can see the spike in the stock's price in early 2021 up to $120.75. Now, this is when they had, of course, the short squeeze, and that's causing the spike that you see here on the chart in early 2021. Now, since then, the stock has dropped and it's pretty much consolidated on that choppy up and down basis for the last 3 years. The stock hasn't, significantly rose back up to reach anything near that 120 high. So we know that the whole thing with GameStop was just a time of controversy, and it was very deliberate on how they acted on that. So that would pretty much show us the inconsistency within the stock, and we know that was due to everything that took place. Now, against GameStop is also not one that I'm personally investing in, just because I understand that the value of the stock for me isn't worth adding to my portfolio. But again, do your research, decide if it's something that you would want to add personally. I'm interested in hearing y'all's opinion on GameStop, because I know some people actually still trade options with GameStop. I choose not to do so, but I know it's on some people's watch list, even like their daily watch list, seriously. So if that's one of, your strategies for trading, let me know. I actually want to hear why you chose it or why you continue to choose GameStop. So yeah, leave a comment if this is a company that you support in any way. I just want to understand the reasoning why. So yeah, let's go ahead and move on. Okay, so next up is Lululemon. Now, this particular stock is one that I have invested in. I'll start by saying that just right off the bat, because this stock for me performs really well. I found great returns on it, made a ton of money off Lululemon within the past 3 to 5 years. So great stock to invest in. Now, they trade off the NASDAQ. Their ticker symbol is LULU. And then, of course, this company is known for its athletic apparel and their accessories, and, of course, their athleisure. Now, they've shown strong growth within recent years because they've expanded their products and offerings to online presence. And they also have a very unique style in which they, provide their clothing. Specifically, I know for me, I like buying their leggings, and they have a very nuanced way of presenting it to consumers because it's their own unique fabric. Now, again, that's totally, just side note. But the investment potential for Lululemon is considered very solid because it's a growth stock within the retail sector. And they benefit from the trends because of the athleisure wear. It has that strong brand loyalty because a lot of people tend to keep going back and buying their products. As far as the pros, within that, the recognition for their athleisure wear is one that's been very notable within the past few years. Because of the continual innovation of the product offerings, it allows people to see, the value in the company. And with that in mind, it also provides growth for their online sales and international markets because it's just all over. It's a global brand. They also have a healthy financial performance with consistent revenue growth, which I'll show you guys in just a second. And some of the cons of Lululemon, I will say, are the reliance on consumer discretionary spending. Now, if you're not aware of what that means, I'll discuss that in more detail in a second as well. And then also the vulnerability to fashion trends and competitive pressures. that is going to always be a factor within any stock you invest in. There's always going to be competition. And then lastly, the fluctuations in the commodity prices affecting the input costs. So again, that goes back to how, they're manufacturing and how they're marketing things. So that's going to be the pros and cons. When we take a look at the market cap, it's going to be around $30 billion for Lululemon. And they do not pay a dividend as well. So you're not going to get any payouts quarterly or monthly for this particular stock. But I do think it's a pretty sound investment, pretty quality for me. It's something that I've chosen to invest in pretty early just because the company, for me, I thought was going to see a lot of growth, and it has. So it's a profitable investment. I think it's good to diversify your portfolio with. Again, totally your choice once you do your own research. But let's take a look in Yahoo Finance so we can see the numbers. All right, so in reference to the financial highlights for Lululemon, we see that the fiscal year ends in January of this year. The most recent quarter, that MRQ, is going to be for April of this year. Profit margin is at a 16.09%. Operating margin at 19.59%. Now we see the return on assets under the management effectiveness is 22.56. Return on equity is 41.94%. We also see the revenue at $9.83 billion. I'm going to go ahead and scroll down under balance sheet so we can see the cash versus debt. So the total cash for this company is going to be $1.9 billion. Their debt is going to be $1.4 billion. So this shows that although it's a pretty close margin, the company financially is not in debt. They have more cash than they have debt. So again, they're performing decently for what they're doing. I do think it's still a solid investment, even though their cash flow is going to be at a $2.38 billion. Still, in my opinion, a great company to invest in. Me personally, I invested in the company some years back, so I've seen pretty much solid returns on the investment. My ROI has been pretty high. So that's just what we have for the financials. Again, we're going to go ahead and hop into Thinkorswim to take a look at it on the 5-year. Okay, so now we're taking a look at Lululemon, and we can see the low for Lululemon was back in 2020 at $128.84. And then we see the high for Lulu is going to be, of course, actually this year. Early 2024, they experienced the high at $516.39. Now, me personally, you guys know, as I've mentioned, I do invest in Lulu. I think this is an excellent company to trade options with as well. I don't always trade options with it, but from time to time, if I catch it, I tend to do so. So it's a quality investment for buying shares and holding long term for me. And then I've also seen it be lucrative for trading options. So again, just take a look at the numbers. If this is something you may be interested in adding to your portfolio, just continue to look into the technical analysis of it. I'll provide more information in future videos about this company because I do think it's a sound investment. I'm not saying it's a buy and hold forever stock, but I am saying that for right now, it's been, successful for me in terms of having gains. So yeah, just keep Lululemon in mind. All right, so next up on the list is Disney. Now, I know some of you are thinking, wait a minute, Disney? Disney's not a sports stock. Why are you grouping it under that category? And my response to that is 4 letters, ESPN. So if you're unaware, Disney actually owns ESPN and all of its subsidiaries. So this includes ESPN2, ESPN3, and then of course all other divisions under the franchise. So with that being said, we know ESPN is a sports powerhouse. So I had to mention it under the category of sports stocks because we all know how big the brand is. Now, Disney is traded under the New York Stock Exchange with the ticker symbol DIS. It is a diversified entertainment corporation with operations in media networks and then, of course, theme parks and content production. It owns the major franchises like Disney Plus for streaming. And then, of course, I mentioned the ESPN being a major factor within their portfolio. And then, of course, the investment potential is going to be that solid long-term investment due to the strong brand. The content is going to be, of course, what we see for the revenue streams. And then the growth sector is going to be also a driving factor. Now, some of the pros, as mentioned, are going to be the theme parks and the media network segments. It's a global brand, so the recognition is always there for a loyal customer base. But that can also be a con in a sense because we know when the world shut down, obviously Disney wasn't making money from live events and people attending the theme parks. So again, that could go both sides and both ways as a pro and a con. Now, some of the specific cons are going to be dependent upon that attendance within those theme parks and how that impacts the economic downturns for the revenue streams. Lastly, it's going to be those competitive pressures within streaming services and content production. Now, we see that Disney's market cap is about $164 billion. They do actually pay a quarterly dividend, but it's less than 1%. So you're not going to get a whole ton of returns on dividends. So if you're seeking that from this company, won't necessarily get it. Now, another reason that I had to mention Disney under the category of sports stocks is a major factor. If you're big on sports, then you likely know this already, but for some that don't know, this will actually be the last season of Inside the NBA on TNT, so it's becoming an end to an era. So just off the pure logic of knowing that, this affects the viewership. Why? Because ESPN will then be next in line for all those views that TNT will no longer get for like those basketball games. They got to go somewhere, right? So those contracts will be written with ESPN, and we know that will drastically affect the next season after, this one is ended. That contract is up. So again, ESPN may see a strike as far as seeing, a spike in, the viewership. So that affects the company within Disney as well. So I wanted to include that because, again, that's a major factor in seeing how the growth of this stock pretty much progresses over the next 2-3 years, maybe even 5 to 10, honestly. So yeah, let's go ahead and take a look at the financials in Yahoo Finance. So now taking a look at the financial highlights for Disney, we see the fiscal year ending in September of last year, and then the MRQ is going to be for March of this year. The profit margin is almost at 2%. The operating margin is at 13.5%. We also see the return on assets at 3.41, return on equity 2.72. We're going to scroll down, take a look at the revenue. It's going to be at $89.2 billion. And then we're going to scroll down to the balance sheet. We'll see the total cash, that MRQ, is going to be $6.63 billion. And then when we look at the debt, they are in debt $46.3 billion. So Disney, based on the numbers, is not a company that is performing well at all. They are underperforming significantly. And this is just, again, the numbers we see. We look at the cash flow, the operating cash flow at TTM is $13.45 billion. Now, all of this makes sense because of the economic downturn that happened, obviously, after 2020. So it makes sense that the numbers would be very low. They're still having some trouble bouncing back from that. So that's not a good sign for the company. But I will say, just given what I've mentioned about ESPN and how things will change because of Inside the NBA being canceled on TNT in the next year, I do think that the company will rise. I don't think that ESPN is enough to make the company kind of just inflate the numbers so highly. So it's one thing that we just kind of have to watch and play out. Do I think Disney is a solid investment right at this very moment? Not necessarily, but I won't count it out as a stock that you could potentially see growth in. So let's just go ahead and take a look at it on the 5-year. All right, so now we're taking a look at Disney. We can see that the high for the stock was back in 2021 at $203.02. And then we see the low for the stock was in late 2023 at $78.73. Now, since then, the stock has rose back up from that bounce back, and we see the highs and the lows. We see the dips, especially in late 2022, early 2023. That's when it was, continuing to stay on that trend for the low. Now we see it's kind of rose back up at least $20 higher, but we see that it is on a drop, so it is kind of falling back down. Now, within this, we understand the factors that have played into why the stock has performed the way it has. People were able to obviously attend the theme parks and participate in those live events in Disneyland, Disney World, all those great things after everything took place in 2020. So the stock did rise. It makes perfect sense when you analyze it from that perspective. Disney is one that I'm holding off on fully investing in just because I want to see how the stock performs within the next 2 years. I do think that it will rise. I don't think ESPN is going to be enough to make the stock just like skyrocket, but I do think it's enough to kind of hold some value for the stock. So it's not one that I'm rushing to invest in, but again, do your research, decide what works best for you. So yeah, this is Disney and the full scope for the last 5 years. Okay, so moving right along to Footlocker. Now, Footlocker is a major retailer for athletic wear and apparel, as we all know. They trade off the New York Stock Exchange under the ticker symbol FL. Now, they primarily run through retail stores and online channels, and their investment potential is going to be closely related to consumer spending for athletic apparel and, of course, any type of wear. They face, potential competition as all other brands do from online retailers, but they have the benefit from the brand partnerships and their store presence. This also leads to their growing online sales channel and the potential beneficiary of the athleisure trends. But some of the cons of Footlocker are the vulnerability to economic downturns affecting consumer spending, which we all know is, again, it's a trendy thing, right? People are going to spend during certain times when they have it, and other times when they don't, they won't do it as much. Now, competition from direct-to-consumer brands is also a threat to Footlocker, and then those online retailers as well. Now, their dependence on trends in the athletic wear and fashion industry, again, add to the cons list. But again, it's still a solid stock to invest in. Would I buy and hold it forever? Probably not. But again, it's a potential stock that you may be, interested in, doing more research on. Now, the market cap for Footlocker is approximately $3 billion, and they also pay out a quarterly dividend of 6%. Now, with this being said, that's extremely high. I will say anything above 5% for the dividend yield is actually a pretty sound dividend payout. So if you're looking and you're chasing dividends, I wouldn't say you had to invest in Footlocker in order to get it, because there's obviously better options in terms of like dividend investing. And I made a video about that, so I'll leave it linked below. But if you were seeking something to diversify within the sports realm and you were seeking specifically to have a high dividend payout, you might want to keep Footlocker in mind. So let's just go ahead and dive into the financials and Yahoo Finance once again. All right, so diving into the financial highlights for Footlocker, we see the fiscal year ended in February of this year. The MRQ is going to be for May of this year. Under profitability, we see the profit margin is at a negative 4.41%, with the operating margin at a 1.60%. Now we look at return on assets, it's at a 1.18%, and then the return on equity is also in the negatives at 11.61%. So we're going to go ahead and take a look under the income statement, looking at revenue. It's at $8.12 billion. We're going to scroll down and take a look at the balance sheet. Now, I always like to pay attention to the total cash. As you guys can see the kind of pattern in this video, total cash is at $282 million. However, their total debt, that MRQ, is going to be $2.93 billion. So that's pretty significant in terms of the difference between the total cash and their total debt. Company, again, not the best investment on paper because they are in debt. You guys can see the numbers. And then when we look at the total debt to equity, you guys can see that. And then, of course, the cash flow is at $267 million. But all that is pretty much negated when you take a look at their debt. And then, of course, we know we have to take a look at it on the 5-year. That way you guys can see exactly how it's performed. Is this company going to be a sound investment on paper? No. However, again, things can always change around. But when we look at these numbers here, they're pretty significant. So let's just go ahead and hop into Thinkorswim so we can see it on the 5-year chart. Okay, so taking a look here at Footlocker, we see that they experienced their 5-year high in 2021 at $66.71. And then when they had their all-time low for the past 5 years in late 2023 at $14.84. Now you guys can see the up and down motion, the fluctuations within the stock's price, and that's going to be contributed to a lot of different factors for the company. Taking a look at the financials, you guys already kind of seen what we have for display to understand full scope. So this is going to be what we have for Footlocker. Is it an investment for me? No, just simply because it's not one that I'm, feeling is necessary to add into my portfolio. So I don't feel the need to have Footlocker at the top of the list or on the list at all, to be honest. But again, it's your opinion on whether or not you would want to add this company to your investment plan. But for me, it's a no. So yeah, this is Footlocker, and we'll go ahead and move on. Okay, so now we're going to go ahead and discuss Madison Square Garden. I have 2 stocks in one for this one. So I have the Entertainment Corp, which is going to trade under the ticker symbol MSGE, and the Sports Corp, which trades under the ticker symbol MSGS. So MSGE owns and operates entertainment venues such as Madison Square Garden. MSGS focuses on the sports teams and the related ventures such as the New York Knicks and the New York Rangers. So these are going to be two stocks that you will see. I'll kind of discuss obviously more in detail in a second. But for the entertainment, they're going to host concerts, the sports events, other live entertainment. And then the potential for the investment is going to be the revenue is dependent on those live events, which are impacted by the economic downturns. So the recovery will always depend on the return to normalcy in live events and consumer spending. Some of the pros of it are going to be, of course, these are iconic venues, the presence of live entertainment, the potential for increased revenue, and then, of course, that strong brand recognition within the entertainment industry. Again, the cons are going to always be whether or not it's dependent upon people attending these events. So again, those ticket sales can be affected, and we know that also affects the revenue in turn. The vulnerability to economic downturns, of course, affecting that discretionary spending once again, and then those regulatory challenges, the competition is always going to be something that's a factor within these types of companies. So we're going to go ahead and take a look at the market cap. So for MSGE, the Entertainment Corp, it's going to be about $2 billion. For MSGS, the Sports Corp, it's going to be about $5 billion. And it makes perfect sense why the numbers would look that way. Now, neither one of these stocks are going to pay out a dividend, so that is a factor to keep in mind if you're looking for that dividend. It's not going to happen from either of these stocks. So let's go ahead and take a look at the financials, and we'll also look at the technical analysis in Thinkorswim. Okay, so we'll first start with taking a look at the financial highlights for Madison Square Garden, the Entertainment Corp. And we see the fiscal year ends in June of 2023. The MRQ is going to be for March of this year. Profit margin is at a 5.74%. Operating margin 8.02. I'm going to go ahead and scroll down to the main important thing, which is of course going to be under the balance sheet. So we see the total cash is $28.01 million. And then when we look at the total debt, it's $981 million. So company, again, once again, the numbers speak for themselves, you guys. So let's go ahead and pull up MSGS so you guys can see the numbers for that. So with MSGS, I'm just going to go ahead and scroll down so we can take a look at the income statement. We see the revenue for the company is at $926.82 million. I'm going to keep scrolling so we can take a look at the balance sheet. The total cash for the MRQ is going to be $40.03 million. Their total debt is at $1.17 billion. So again, these numbers are always going to speak for themselves. When we look at the total operating cash flow, it's at $21.45 million. These investments are going to be totally at your own discretion on whether or not you feel they're going to be something worth even trying to invest in or worth even researching. So we're going to go ahead and take a look at these numbers on Thinkorswim so we get full scope on the chart. Okay, so now we'll take a look at Madison Square Garden. We'll start with the Entertainment Corp, which is MSGE. We see that the all-time high for the past 5 years was in 2021 at $121.42. And then we see the low was at $27.55, and that was going to be in late 2023. Now we see that this stock is on a downward trend, and it's kind of kept that same pace and that same trend for the past 5 years. You can see it hasn't made any significant rise back up or anything close to that 5-year high. So we know that this stock is underperforming, and that's just based on what we see as far as financials and the technical analysis as well. So let's go ahead and take a look at MSGS. I'm going to pull that up here. All right, so this one is kind of doing the opposite in a way. You guys can see here, it's kind of been consolidating within a range, but we do see it at a high. So we see for 2021, let me kind of scroll over. That way you guys can see the high and the low for both. You guys can see in 2020, they experienced their high at $218 and their low at $123. And then when we continue to kind of watch the stock's performance, it pretty much stayed within a range. But we see now that the stock is kind of moving on an upward trend and kind of moving towards, continuing to rise. I do think it will surpass that 216. I don't know how soon it'll happen, but I do think it'll reach a new high and create a higher high very soon. So this stock, again, is not one that I'm choosing to invest in just because there's other places I can put my money, but it's one that you can definitely keep in mind for future reference. So yeah, that's going to be both Madison Square Garden and the Entertainment Corp, and this one is also the Sports Corp. All right, y'all, to wrap it all up, I want to go over the investment considerations based on what I discussed to draw a sound conclusion. In reference to risks, GameStop, Footlocker, and Nike are higher risk investments due to strong downtrends, market volatility, and the speculative factors. In regards to growth, Lululemon and Disney offer more consistent potential for growth trajectory because of their strong brand presence and their strategic marketing. As far as industry trends, DraftKings and Madison Square Garden Entertainment and Sports Corp are positioned in growing sectors due to sports projections and live events. However, they do face regulatory challenges caused by uncertain market conditions. Now, as y'all know, all of these figures can and will likely change over time. So staying updated on the financial data and analyzing the stocks for the most current market information is key. So feel free to leave your thoughts and comments down below. And if you found the information to be helpful, feel free to let me know that as well. I thank you so much for watching, and I'll see you in my next one.